Hi, I'm going to pop a little trade on just simply because I opened my mouth in the Discord group, but also answer one of the questions from the guys. Can you learn too much? And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the overgrown child that is the Scruffy Trader. And what I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, please click the subscribe button. It genuinely helps. And if you do have a query or a comment, I'm very easy found. Just drop it in the section below. I answer every single one. So what am I banging on about today? Well, I'm actually going to drop a trade on. It's the normal kind of situation as to why I'm going to drop a trade on. I open my big mouth. Well, I didn't open my big mouth. It's just every day when I'm talking to the guys in the Discord, I'll tell them what I'm looking at. It's only fair that if I tell them what I'm looking at, I should follow it up with a trade, and that's kind of what I'm doing here. But I also picked up on a comment from one of the guys in the group, and they asked, can you actually learn too much? So I'm going to discuss that as well. So what I'm going to do first is I'm going to do the trade, grab myself another coffee, because we all know Scruffy likes a coffee. He does today, because what a weekend we've had. Bloody hell. It's I don't know what it is like in your house, but in my house it's manic at any one time. I have the weirdest life on the planet, and if anybody ever sort of spends the night listening to me, I get into scrapes like there's no tomorrow, and I've got Winky, who's as elegant as can be, just sort of looks at me in amazement at the silly things that I do. And this weekend was one of them. So I'm kind of suffering for it at the moment. In other words, had a few too many to drink. Nothing wrong with that, because one thing that I do believe in is living your life. And you can get obsessive with things, and trading is one of them. And it kind of goes on to the question as to what I'm going to answer at the end of the video. If you obsess over it so much, sometimes you can't actually see what it is you're looking to find because you're trying too hard. And ultimately, my style of trading has come from that, because I have made every mistake under the sun over the last 15 years. I really have. And I have spent more money than most people will see in a lifetime. But that's just me being daft. And I'll get onto that a little bit later. Anyway, so what I'm going to do is I'm going to show you what it is I'm looking at. I'm going to set it up, let it play out, answer your question. So let's see what it is that I'm looking at. All right, so I open my big mouth on the FTSE. If I pull that over, there it is there. Call this out at, there you are, 2211. Just so they can see exactly what it is. I'm not expecting it to sort of trade probably for another half an hour to an hour. So they've got plenty of times to set themselves up. They could, and the actual trade is going to be for overall a few days. I'm doing the day trade at the moment, so I'm looking to be in and out relatively quick. But my thesis for it is going to be running for a couple of days. All right, and I'll show you for why in just a second. If you haven't seen this before, this is our Discord group. I put trade ideas in pretty much every day. I normally trade 3 days a week, but kind of end up doing it 5 days for the guys. I do strength every day. This is a great tool. It really is. It's not a direction picker, but it's a good market picker. What it's trying to do is find the weakest and the strongest. At the moment, we're looking at the CAD and the JPY. You can see they are poles apart. You can look at that and think, right, there's going to be movement there. Is this being echoed down below? Well, if you look down below, it tells you a different story. It actually tells you the CAD and the JPY are both losing ground. And this is why it's not a direction picker. Because in theory, that should be constantly going up while that one's constantly going down. But whereas down here, it's actually telling you they're pretty close together. So it's almost like a coiled spring. It's telling you that they're compressed and be ready for the explosion. All right. But you can work your way through them and you can find some that are poles apart. Sort of like the Aussie is gaining ground. The US is losing ground. So you can then look up here to see what's happening. And then, yes, that is strong, that is weak. So suddenly that becomes a very good pair to trade, and it's picking your direction because they're both aligning with each other. All right. And then you can look on this side and it tells you how long it's going to take. Because if you're looking to get 30, 40 pips out of a move, you need to look at the ATR. And if your ATR, for argument's sake, say you're looking at this one, the Aussie CAD is 45, and you're looking for 40 pips, the chances of you actually catching the bottom or the top is pretty slim. So it's naturally going to run a few days. Hence why I look at the 4-hour chart when it's a low ATR, because I know it's going to take time to play out. If it's a fast ATR, in other words, it's got a wide range, like cable for argument's sake, and have 100, I know I can get 10, 20 pips out of it quite easily in a day. So I look at an hourly chart, get trade idea from, and then drill them down into a 5-minute to trade. That's kind of what I use this for, and I put it up for the guys every day, and I explain what's within it every day as well. Very good. And then of course we just talk about whatever. Forex, like again, I'm looking at the 5%ers account that I'm running. So I'm telling them what I'm doing with the euro dollar today. Then we just have our little bit of merriment where we amuse each other between trades. Because one thing that I implore you to do is slow yourself down. Stop trying to trade every wave in the market. Stop trying to overtrade. Find something to do in the meantime, and that's what this is. So we talk to each other and one thing and another, and it stops us overtrading. I, of course, play with my toys, drink coffee, and wind Winky up. So, that was that. This is the trade. All right. What am I doing with it? Well, I'm actually looking to go short on this one. And I know straight away you'll be scratching your head, thinking, oh, hold on a second here. The big fella's dropping a bollock, because that's clearly an uptrend. Is it? Is it really? Been listening to this plank too much?
You ding-dong!
Oh, make it stop!
Because when they are talking, saying, oh yeah, higher highs, lower highs, all of this sort of bollocks, how often does it happen? It doesn't happen that often. The markets will do what the markets will do. You can't predict it. I can't predict it. But what I can do is I can look at the past to get a good idea of what's going to go on in the future.
Prophecy caused all this trouble.
And I don't subscribe to any educator on the planet. Not one of them. Personally, I think they're all full of shite. But that's just me. Why is that? Well, I guess it's because they're all cinematic. And they look great and they talk very elegant. But they don't actually show you the goods.
Isn't that logical?
I put my head on the block every single day. Every day. And I get slagged off for it. So I just don't get it. But anyway, sorry. I'll show you why I think it's going to go short. As you can see, the FTSE has been doing incredibly well. But within the waves, you can see these waves here on the daily. It pushes up, pulls back, pushes up, pulls back. And to a degree, the educators are right when you're looking at this. But when you're down on a 5-minute chart and they're trying to say this, that's why I call it shite. Because all a short time frame will tell you is where to get in, where to get out. It can't tell you anything else because it's too narrow a data source. It's just noise. It really is. Even the hour, to a certain degree, can be noise, but it is slow enough to be able to see roughly what's going on, and it's also fast enough to give you the signals as well. So what you do is you actually go further back out. Now your daily is a good place to be. All right, look at your dailies. So you can see that's moving steadily up. All right, indices do, you know, and for long-term trading on an indices, you should always be looking kind of to the upside. All right, so there it is there. So why am I going short? Because there's a pulse. It is here. And if you measure it, put a measuring tool on it. Kind of there. There's your pulse. You can kind of see it. Pull it to the last one that it went down. I mean, all right, that one's a bit shallow, but it's pretty much the same as that one. It's not a million miles off that one. It's not a million miles off that one. So, why did I just do that? I'm really looking to see if it's about time to be running out of steam. Now, this can easily squeeze up a little bit, but it is at the top end of a move. It is what I was driving at with measuring those out. It can never be accurate because the markets are not accurate. You might think it's moving to 100, but it'll squeeze up to 120 and then come back on itself. It's just the way that they are. So let's look at this. Why am I looking at it? Strong drive, strong drive, strong drive, nothing. It hardly did a thing. Right? Yes, it's Sunday night, but what it showed you is there was absolutely nothing going on. In other words, whatever steam was running up, it stopped. And why did it stop? Because it's indecision. And that indecision is now manifesting itself this morning. And here it is here. This red candle. So it's run up because even on a Sunday, if the steam is still going, it will move to give you an idea of what the markets are looking at. This one showed nothing. But if I drag it out, you can see the tail to the top and the body to the very bottom. So it's actually telling you the pressure's down. The steam had run out. And then that is confirmed with this, what we're looking at here. All right. Take it to a 4 hourly. Absolute beautiful drive. And then thump. All right. See? These sort of things here. So that is a move downward. Bring it to the 1 hour. And there it is there. Thump, thump, thump. All the pressure's down. You can see it. Strong pressure. And it's now in one of my zones. One of the bus stops that I like to work to. I use these all the time. Why do I use them? Because they're simple. It gives clear defined areas of the chart. I don't like to trade out of through a red, but I like to trade through a green. What do I mean by that? Well, I don't care if I entered here and carried it through, but if it's here, I'll trade out of it. All right. And the idea of what I'm looking at here is it's caught between two areas. It's caught between that zone and that zone, and it is stalling here. So regardless of what happens at this point, I'm at 50%. because it's either going there or it's going here. But looking at the higher time frame, it's kind of telling me it wants to come to this. So the idea is it'll go there, bounce, stall in this, and then move further up to the upside. So I can capitalize on this move coming down. But how big is it? Well, let's have a look. I think that's a hefty old move. Now bear in mind, I only want 20 pips. Well, there's 86. Right. So, if I only want 20 and I've got an 86 pip gap, I think I'm in with a shout of catching some pips. And not only can I catch them here, if I get in too early, I can stage in all the way up to this and still come out of it with some money. Right. So what I'm going to do now is I'm just going to sort of pause the camera because it's not quite ready. It's maybe sort of, I'll look at it in 15 minutes because I just want to see it settle down a little bit, and then I'll look to enter it. Okay.
Well, we're waiting.
Okay guys, so it's starting to show signs of the reverse, well, I'm saying reversal, the move to the downside. I've pre-marked out my entry points. I'm actually looking to get in down here somewhere. If it goes against me, I'll stage in it here, 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 and here, and I'll kind of bounce the price as best I can. If it breaks the top of here, then I'm obviously wrong, and that's just the name of the game. Okay. But my aim is to get it to 20-25 pips. I'm only looking for a couple £100. And that's another key thing. I don't sort of try and stretch the market out. As soon as I've done what I need to do, I quit. And then that's it. And then I'll look at it again tomorrow. And that keeps my consistency up as well, because I'm not chasing the markets around. So let's have a look and see why. Well, if I just drop on a moving average, I kind of use an 8 quite a lot, which many of you know. I use it in a strategy that I call the push strategy, which works very, very well. And that's kind of what's happening here. It's set to an 8 EMA, and I'm looking for the price to stay on this side with a tag. Well, there's my tag, and the price has stayed on this side of it. It's in a zone, and I'm looking to work it down to this zone. So it's kind of, everything's ticking the boxes, if you like. So now what I need to do is I now need to sort of move my way down the time frames. I'm just going to take that off for now, because my ideas come from the hourly. My trading is done on the lower time frames. So again, I can see it's trying to push up and it's moving down over. All right. So let's take it down to something I can watch. And sure enough, it's kind of there. All right. So do a candle count. 1, 2, 3, 4, 5. So from the base of that to there. So I'm looking to get in here, the lowest of the 5. So I'm going to put 2 orders in. One there. And then another one. Same place. Just like so. That's my starting point. Okay. Just tighten that up a touch. What we're going to do? Well, it's very simple. I want to be in and out. Now, while it's in the green, I'll constantly sort of be looking to trade this. How far do I think this is going to go today? Well, that's the $1 million question, isn't it? The range on the FTSE is about 70 odd ish. Okay. So setting a target at 50 is ambitious, but it's doable, and that's why it's there. It's just an arbitrary figure at this moment in time. And what I'm looking to do is build on this one here. So what I'm going to do is this. I'm going to put in a line, at least it will do when I click it on there, just like so. That's my point of no return, so I can now move that sort of down here out of the way. So, well, in fact, what we'll do is, because we're going to try and hold these to the end of the night, put one there. We'll run that to about there, just for argument's sake. Right. So all this got to do with a slice of bread. Not a lot. It's just telling me where parameters are. So I know that's 10 pips. And I'm going to try and hold one of them down into here. So that'll give me a full salary. But then I'm going to bounce this. All right. What does bouncing mean? It just means when it hits 10 pips, I'll take half the trade off maybe. And then I'll put another position back where it originally started, because the price often, as you can see, bounces backwards and forwards. So the idea is it'll come down, it'll pay me. If it goes back up, picks the order up again, and then goes back down on its journey, it'll pay me again. Rather than sort of think, oh, I've got money in the bank. Oh, I've got no money in the bank. Oh, I've got money in the bank. Oh, I've got no money in the bank. Oh, thank God it's gone my way. Because I bounce things, what it does is it builds up a position while it's paying me. All right. That's kind of the watered theory behind it. And the trick is, and it's like Scruffy Madness, the trick is always have your stop the same and your starting position the same. So say I'm starting at £20 a point, I will work within £20 a point. So I might start with a fiver or a tenner and then build up to a 20 rather than just go full into the market at £20. Because then I've got nowhere to go. And bouncing is the same principle. You're just taking little bits off your position, but leaving a little bit on to run constantly. Okay, and that's the theory behind it. So that's the makeup of the trade. What I'm going to sort of be looking to do. I'm looking to get about 200 quid. If I can get £200 out of today, I'll be more than happy. So I'll speed it up, and then we'll have a chat about, can you learn too much? That's that, guys. Stopped out. Market often does rally later on at night, which is why I took my profits and just pulled the stops in to see what would happen. Now this is primed up, it'll slow down now for the rest of the night. And I'll look at it again tomorrow. Because like I say, this is going to be across the multiple days. So how well have we done? There you go. Told you at the start, I'm looking for 200, 243. Happy days. So, let me swing on to the other camera. Okay guys, so that was the trade that was. So I suppose I better answer the question I alluded to at the start. But before, I want to give a special Star Wars salute to my friend Ian, the wildling over the wall. Great to see you at the weekend, kid. And thanks very much for my latest addition to my desk. Nice Star Wars light up toy. Thank you very much. You certainly know the child inside of me. Keep trucking, fella. We all get there in the end. Catch up with you soon. Anyway, as I was alluding to, can you learn too much? And it came from one of the questions within the Discord group. And basically what it was about was, can you confuse yourself? Well, the answer is yes, you certainly can. In my early years, sort of going back for over 15 years now, we used to buy currency in order to buy goods in foreign lands. Basically, we were looking to buy the US dollar when it was cheap, and then we'd sort of buy in Japan. Now, everything was done from levels. You know, you're just looking at level and you're just waiting for it to get to a good price. And the guy that sort of helped me along the way with this sort of path was an ex-bank manager, and he happened to work in my office, and that's kind of where this all came from. Now, he showed me all of this, and did I listen? No, of course I didn't. Because I thought I knew everything, and therefore if I'm looking at daily charts for the business and I'm doing it personally, well, I can make a fortune working on the 5-minute chart. Got that one wrong. Instead of making a fortune, I lost a fortune, and then I spent a fortune learning how to lose a fortune.
Are you serious?
And I know that sounds odd. And it's because, well, I was basically like a dog chasing cars. You know, see a new shiny one, off I went, you know. And if I caught it, you'd try and hump its leg. Well, that's not really going to do anything, is it?
Oh, hey.
Oh, that's disgusting.
I kind of got myself into a muddle. But then over the years, I stripped everything out. And I went back to the basics. And I figured out that if I'm working on a high time frame, I can enter on a small time frame, but I can't do it the other way around. And what I mean is I can't get the information I need from a small time frame. And that's where this education kind of knowledge thing came from, because when you're looking at all the videos, they use all these fancy terms, you know, higher high, supply and demand, all of this. It's just bollocks, you know. And when they're talking about economic data and one thing and another, us as retail traders are not privy to that information. So it's just hearsay, it just sounds good, it's cinematic. And you can read as much as you like, and you can chase sort of every piece of information as much as you like. The only place it'll ever work is if you're a share dealer, because you can get information and build a sort of profile of a company. But to do it in the Forex market, a market that is so big it cannot be manipulated, wasting your time. It's pretty much 100% technical, because all of the data is already built into the markets, and you'll never know what that data is. So if you've read something and you happen to trade it and it lands right, it's more good luck than good research. Hope that kind of makes sense. Because you can have a very intelligent guy. In fact, the people who fail the most in trading are not those that are as thick as a plank. It's the ones that are really intelligent.
What?
Because they try to over-engineer the process. They want to know every little nuance of how the market works and everything. And ultimately, they learn nothing. You know, they know a lot of technical stuff. They know a lot of sort of jargon. But can they actually trade? No. The person who makes money is normally as thick as a brick and just follows a very simple set of rules. You know, I am by no means Einstein.
No way!
But I'm disciplined and I can follow the rules. I do make mistakes, I'm only human, but I follow the rules. And those rules are set in stone for me. I have maybe 4 strategies in my tool bag that I can call on at any one time. And the trick is recognizing the market conditions for which one of them I'm going to use. But I mainly only use one. And that's what you see me most of the time. It's sort of zone to zone. And the way the rules are laid out, I can either trade down into a zone to a bounce to move the opposite direction, so it's a continuation trade, or I'm using that move down or up into a zone just as a day trade to get in and out. Because when I'm day trading, I am market neutral. I don't give a toss what the main trend is, because there's trends within trends. And that's why when you hear them talk about higher highs and higher lows and all this sort of bollocks, if you're day trading, it doesn't matter, because the market will do that within the day. And a trend on a small time frame is just noise. You need to take it from the higher time frame. If you're swing trading, you have to be dominant trend. And what I mean by that is, if the overall trend is up, you are only going up, just because the stops are a bit wider and your targets are a bit bigger. Simple stuff. But going back to learning, don't chase the unicorn. Doesn't exist. Keep it simple. You know, when you're looking at indicators, whatever anybody tells you, there are supposedly lagging and leading indicators. There's not. They are all lagging because they're all based on past data. And because it's based on past data, it can only ever be lagging because it takes time for that to catch up. So what you do is you put all the elements together and you make a prediction. And that's it. So there isn't anything that can tell you the future. All you can do is see where it is in the here and now and hope that your homework is correct. But keep it simple, guys. Keep it really simple. You know, even down to just one indicator and levels. That's it. That's about as simple as you can get it. You know, and if you are going for 2 indicators, have one on the chart, Dolce channel, Bollinger Band, moving average, whatever it is, and one below the chart, a MACD, an oscillator of some description. That way you won't get too confused and stick with what you know. If you understand the stochastic inside out, stick with it. It'll be your best friend because you know how it operates, you know what the conditions are. But as soon as it stops working, don't just throw it in the bin, because all systems work. You just have to learn the market conditions. And if you're going on this path of learning, just keep it simple, but learn everything within those simple rules and get used to it. Then you'll be fine. But if you're jumping from this to that to the other because you're trying to learn everything, you're probably going to fail. I know that's probably not what most people want to hear. I got a backlash on the last video I did because I said Holy Grail. They naturally assumed the big fella was going to give all my secrets away. No Popeye, that isn't going to happen. But if you do want to see all my secrets and exactly what I do, it's all in my Discord group. Because those guys I genuinely look after and I've got their best interest at heart. What I said in it was, know when not to trade. That is the holy grail of trading. Because it's too easy to get caught up in the mood and the euphoria of trading. Right, it's on its way up. And I've had it a few times where I've said, right, I'm waiting till it gets up there, then I'm going to trade it back on itself. And straight away they say, well, why don't you trade it all the way up? Well, what if it doesn't go that way? My thesis is down. So I stick with my thesis. And that's the easiest way to trade. And they got a bit upset when I said don't trade. Less is more is the secret to trading. I trade once, twice a day. The trade you've just seen, it took hours to play out and it paid me. But I wasn't looking for every wave. And that's what makes me consistent. I look for one good trade a day and I know what the 2 points of where I want to get in and where I want to get out are. And then I try and catch the bounces in the middle, but it's essentially just one trade. I'm not trying to chase the market. So, I'm not sure whether I answered the question or not, to be honest. But if you're stuck, I'm very easy found. I'm very amenable. Everybody gets an answer that contacts me, and you'll find all my contact details in the description below. So I'm going to leave it there. Do it all again tomorrow. And as always, guys, do what you love and the money will follow. See you all in the next one.